When we had the halving, we're pretty much flat to today. Sideways summer happened. The sideways summer is over, and we go up from here. And so people will try to attach Bitcoin to all these different narratives. Well, guess what? It doesn't matter. Doesn't matter who the president's going to be, Bitcoin's going up. Doesn't matter what the monetary policy is, Bitcoin's going up. Doesn't matter what happens with the ETFs, Bitcoin's going up. And so Bitcoin is going to go up from here. The question is not whether it's going to go up, it's how much is it going to go up.
Anthony Pompliano kicks off with a bold declaration. Bitcoin is poised to surge, and the catalyst is simple. It's time to go up. Drawing parallels to previous bull runs, Pomp reminds us how Bitcoin followed a similar pattern during the 2020 halving. Back then, Bitcoin hovered around $9,000, went sideways through the summer, and suddenly exploded by October. Within just 6 months, Bitcoin shot from $10,000 to $64,000, a staggering 600% gain. The recent 2024 halving mirrored this pattern. As expected, we had another sideways summer where Bitcoin traded flat. But now, Pomp argues the time for sideways movement is over. The coiled market energy is ready to release, setting Bitcoin up for a significant upward move. In his view, the narratives around ETF, elections, or monetary policy are distractions. Bitcoin's rise isn't dependent on these factors. It's the structural supply shock from the halving that will ultimately drive the price.
Please take a little time to like this video, subscribe to the channel, and turn on post notifications for more videos like this. You can also check out our other videos on cryptocurrencies and the overall digital asset space and drop your comments and observations in the comments section below. Everything you do helps with the YouTube algorithm and immensely contributes to the channel's growth. Thanks and enjoy the video.
People are just grasping for straws. No, it's not going up because of the election. It's not going up because of the ETF flows. It's going up because it's time to go up. Sideways summer is now officially over, and we go up from here. And so if you go back, you can use 2020 and 2021 as the perfect overlay. People forget that we already had a supply shock earlier this year. The supply shock is that halving. And so in May of 2020 is when that supply shock happened. Bitcoin was trading somewhere around $8,000, $9,000. We then went the whole summer, sideways summer, and nothing happened. Everyone's like, well, is it broken? You know, it's like a meme where they're like with the stick, we're just poking it, like, does it work? And then all of a sudden we got to the end of October and up only, and we went from $10,000 to $64,000 by March. And so in 6 months or less, we went up 600%. Fast forward to 2024, there's a whole bunch of chaos, FTX, nonsense, bear markets, bull markets, interest rates, all of it is noise. What we are watching is we are now going to get the pricing in of that supply shock. When we had the halving, we're pretty much flat to today. Sideways summer happened. The sideways summer is over, and we go up from here. And so people will try to attach Bitcoin to all these different narratives. Well, guess what? It doesn't matter. Doesn't matter who the president's going to be, Bitcoin's going up. Doesn't matter what the monetary policy is, Bitcoin's going up. Doesn't matter what happens with the ETFs, Bitcoin's going up. And so Bitcoin is going to go up from here. The question is not whether it's going to go up, it's how much is it going to go up. And the severity of that move is going to be greatly determined by a number of different factors. Obviously, you need more buyers than sellers. You need people to not sell and kind of hold that Bitcoin. There is a public narrative that Trump will be better than Harris for Bitcoin. All those things, they do not impact direction of travel. They impact the severity of the move. And so my guess is that we are going to see over the next 18 months or so, a pretty substantial move in Bitcoin. My only word of caution is do not expect it to be nearly as big on a percentage basis as it has been in the past. And so if you're used to 500, 1,000% move post-halving, maybe you should expect maybe 100 or 200% move, which still is great. But as an asset gets larger and volatility comes down, the asset naturally can't just keep compounding at these really high rates of return forever. Bitcoin is up about 60% so far this year. And so that's a great performance for any asset. But 60% in a year where gold is up 30% year to date, it's only up 2 times more than gold. And so you look at that and you say, look, it's not that crazy outperformance of, gold's flat and Bitcoin's up 500%. And so I do think that you've got to kind of contextualize this. And then the other thing that you got to look at is both candidates are saying that they are going to be positive, but it doesn't matter. The president of the United States cannot really do anything to hurt Bitcoin. Mm-hmm. They a lot of people say, oh, what do you mean? They could go and they could outlaw ownership. There's a lot of countries around the world that have outlawed ownership, and Bitcoin did not care. Continue to produce block after block after block of transactions, and Bitcoin is fine. So you can hurt the American citizens, but you can't hurt Bitcoin. And so that is really important, because ultimately Bitcoin's value is derived from the fact that it is not controlled by anyone. It's never been hacked. It is a programmatic monetary policy that is globally accessible to anyone in the world. And that is a very nuanced component, because in a weird way, the most powerful person in the world, the President of the United States, cannot wound and kill Bitcoin. Instead, Bitcoin will survive the president, Bitcoin will survive the country, and Bitcoin will also continue to produce blocks of transactions regardless of what policy is in any one country. And the craziest part is, even if every country came together and they said, we're all going to collude and we're going to shut down Bitcoin, they couldn't do it. Bitcoin is the strongest computer network in the world. If you take AWS, Google Cloud, and Microsoft Azure, you put all that computing power together, Bitcoin is still bigger than all of them combined.
Mm-hmm.
This thing got, like, talk about the public health crisis that got let out of a lab. This thing got let out of a lab in terms of the free market of ideas, and it is winning in a meritocratic kind of world because it is the best idea. It is the best implementation. And so people want to attach these narratives because it makes us feel better. But the simplest explanation is the most likely.
Mm-hmm.
Bitcoin is going up because it's time to go up, because we had a 50% supply shock. Demand has not changed. Actually, it has increased. Bitcoin's gone sideways. The coiling of the asset is ready to unleash, and here we go.
Pomp discusses why traditional investments, particularly bonds, are no longer appealing. If you hold bonds, you're an idiot, he states bluntly. Over the past 5 years, bond returns have been negative, with inflation eroding both capital and returns. Holding bonds today, in Pomp's view, is a guaranteed way to lose money. Even if bonds offer nominal returns of 3%, inflation ensures the real return is negative. Pomp criticizes analysts who suggest bonds might outperform stocks over the next decade. He argues that inflation will inevitably push stock prices higher since companies are priced in dollars. Betting against U.S. stocks, according to Pomp, is effectively betting against America's long-term economic success. Never bet against America, he reminds us, quoting Warren Buffett. For investors seeking growth, Bitcoin offers a far better opportunity than bonds, which provide no real return in today's inflationary environment.
The Bitcoin community is good at a lot of things. One of the things that it is not good at is intellectual flexibility. And what I mean by that is it's very hard for Bitcoiners to hold in their head, I want mass adoption, and I'm willing to give up returns for it. But that is what mass adoption means, is if you want everyone to hold the asset, then you are going to get a dispersion of ownership. You are going to get a dampening of returns because it is less risky. So buying Bitcoin in 2024 is child's play compared to buying it in 2016. But if it is less risky, the risk you take is the return you get. And so you should expect a lower return. Now, the nice thing is Bitcoin is still quote unquote riskier than buying the S&P 500. So you should expect it to outperform the S&P 500. And risk is not true risk. Risk is basically how many people in the market believe that this is safe, likely, consensus, you use your term of choice. And so my expectation is that Bitcoin will do better than gold, stocks, real estate, anything else, but it's just not going to perform on the upside to the degree that it has done it in the past. By the way, that's what every cycle of history so far shows, is that the returns in the first cycle were highest, the second cycle were second highest, the third cycle were the third highest, and it's going to continue. But Bitcoin is up 60% to start the year. There's not very many assets that you could have bought at the start of the year on January 1st and outperformed Bitcoin. And so I'm not bearish. I'm not saying that you shouldn't buy Bitcoin or hold Bitcoin. What I am saying, though, is you should understand that happiness comes from a meeting of expectations and reality. And if your expectation is that Bitcoin's going to $500,000 in the bull market, and that doesn't happen, you're going to be unhappy. You're going to feel disappointed. But instead, if you have lower expectations and reality matches or exceeds that, then you will be happy. And so set your expectations lower for any sort of price movement in a bull market. And that is the way to guarantee that you are happy over the next 18 months. If you hold bonds, you're an idiot. That point blank period. TLT over the last—
This is not financial advice.
TLT over the last 5 years is down like 25%. How is holding bonds? You don't make money. The real return on bonds is negative. On top of that, you get the capital is being eroded away because of inflation.
Right.
So people sit there and they say like, oh, I'm holding bonds. I have a 3% return, blah, 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 whatever. No, you don't. You're losing money. You are losing money.
Inflation isn't keeping up with.
Yes. Bonds drive a negative real rate of return. And so it is dumb to hold bonds that do that. Again, you can argue with me all you want. That's dumb. How do I know? Because I have money in the market. Does the person who's writing this article, are they buying bonds? Show me your portfolio. If you're telling people that bonds are going to do so well, go put 100% of your portfolio in there. Because if you're not willing to do that, then you shouldn't be able to write this report. On top of that, the idea that the S&P is going to return 3% over a year for the next 10 years, that's the nominal rate of return that they're talking about. So if you add in inflation, they are basically saying that the stock market is going to return a negative return for the next 10 years.
But let me stop you right there. Hold on. They say they also see a roughly 72% chance that the benchmark index will trail bonds and a 33% likelihood they'll lag inflation through 2034.
Are these people stupid? Do they understand how finance works? If you have a stock market that is priced in dollars and the dollar is being debased, you can't lag inflation because the inflation pushes the stock prices up. You're the 500 largest companies in the United States. You're the best companies ever created in the history of humans. And they're telling us that they're going to grow at less than 3% a year for the next decade.
That's what they're saying.
Which means it's a negative real return. These people have lost their minds and they're violating rule number 1. Warren Buffett is very fond of saying never bet against America. Goldman Sachs is basically telling people you should bet against America.
Well,
That's what they're saying. They're saying the S&P 500 is going to deliver a negative real rate of return. So if you as an investor read that and you want to make money, essentially you should bet against America.
Yet,
you should sell and not lose money because a negative real rate of return means you're going to lose money holding the S&P over the next decade, according to this report. That is dumb.
Pomp also touches on the philosophical side of Bitcoin's success. He likens Bitcoin's release into the market to a powerful idea escaping from a lab. It has grown organically and won in the marketplace of ideas. Bitcoin's open-source nature, decentralized control, and predictable monetary policy make it the ultimate financial tool for the digital age. Despite attempts by skeptics and governments to undermine Bitcoin, the network continues to thrive. Pomp emphasizes that Bitcoin's strength lies in its ability to resist central control. Even if every nation-state attempted to ban it, Bitcoin's global network would persist. In a world driven by meritocracy, the best ideas win, and Bitcoin is proving to be one of the best financial innovations of our time.
Please like and subscribe my channel.